How are you?
Raj Menon checks in with his mortgage broker every 6 months to make sure he's getting the best home loan rate.
We all believe the RBA is going to cut.
He bought his dream house in 2020 and has seen his interest rate go up by about 4 percentage points since then.
Every month I see or hope that perhaps the rate might come down again, because any little rate cut would actually make a tremendous difference in our household.
The official cash rate has sat at its current level of 4.35% for more than a year, but soon there could be some relief for homeowners like Raj.
Since the start of the year, we've seen a huge uptake of clients, whether or not they're new or existing, come to us to try and understand what their borrowing capacity looks like, with the onset of a rate cut hopefully next week and maybe more to come.
Economists had been predicting a cut in May, but have shifted their forecasts forward, with all 4 big banks expecting a 0.25 percentage point cut in February. It's all because of recent data showing underlying inflation has moderated more quickly than the RBA expected.
I think what they're going to say is they've redone their forecasts. They're now finding that you'll be in the middle of the target range, either by the end of this year or early next year.
The number of rate cuts is hotly debated. In the next year, ANZ is predicting 2, while CBA and Westpac think there'll be 4 and NAB is forecasting 5.
I think they'll basically just maybe do 25 per quarter, and we have rate cuts down to 3% by early 26.
If there is a rate cut in the next meeting, homeowners with a $750,000 mortgage and 25 years left on the loan should see their repayments fall by $115 a month. That's based on an average variable rate of 6.33%. Even if the banks pass on the rate cut, it's a good idea to contact your lender, since some won't automatically adjust your minimum monthly repayments unless you request it. Lenders are already cutting fixed rates to lock customers in.
Fixed rates have come down off the boil, but they have probably got a lot further to fall. We expect to see a flurry of fixed rate cuts come through should we see a cash rate cut.
During the height of the mortgage wars in 2022, non-bank lenders were accessing cheap funding on the wholesale market and could offer the cheapest rates.
These days, the higher rate market has turned this on the head. Banks are now relying increasingly on deposits to fund their home loans. The non-bank lenders don't have access to deposits because they're not banks. As a result, the lowest rate lenders on our database right now are from smaller banks and credit unions.
There was already media talking about what rates were doing.
Raj Menon is currently with one of the bigger banks.
A remortgage is always on the cards, particularly if there's an interest rate cut.
Which he's hoping could save him hundreds of dollars a month.